mikrofon. Ja se izvinjavam. Imam, kako ne. Imam sve u redu. Džabe, ja kažem, Milan, otvori mi vodu. Sipaj malo. Ja ga već kritikujem. Dame I gospodo.
Ladies and gentlemen, esteemed members of the press, dear colleagues, dear members of the Executive Board and of the Council of the Governor, and for the first time, representatives of the Serbian Association of Banks, welcome. To our dear colleagues, Danilo, Aca, Mihailo, and others, and those who are not here, I wish to extend special thanks for their support and help in the preparation of the presentation of inflation report. The period since our previous February report has been marked by developments of immense bearing on the overall world economy. We are faced with escalating geopolitical tensions, conflict in Ukraine, and sanctions that hamper economic flows, which has caused major disruptions in the international commodity and financial markets. Together with the effects of stepped-up counter-pandemic measures in China, this has amplified fears that shortages and halts in global supply chains, which were expected to resolve gradually during the year, may extend or even become more pronounced. Russia and Ukraine are important global producers of cereals, metals, and minerals, and Russia of oil and natural gas as well. Therefore, the conflict caused these product prices to continue up and come close to or even go beyond their historically highest levels. Amid such circumstances, all relevant international financial institutions downgraded the economic growth prospects for this year and significantly increased the inflation projection at the global level. The impact of the conflict on the global prices of energy, food, and raw materials is important, and together with sanctions, acts as a drag on global economic growth, notably the economic growth of the euro area as our biggest foreign trade partner. With this in mind, relative to the expectations from February, the National Bank of Serbia has adjusted its main macroeconomic projections. Inflation and current account deficit have been revised up and GDP down. Continuing, we will elaborate in more detail on our new macroeconomic projections as well as monetary policy decisions made in the period since the previous report. As geopolitical tensions escalated, global inflation, which had accelerated over the past year under the influence of various factors associated with exiting the pandemic, gained new wind in the back and in many countries reached levels unprecedented in recent decades. Thus, euro area inflation rose to 7.5% in April, which is its record since the bloc's establishment in 1999, and in a number of Central and Southeast European countries, it reached double-digit levels. Considering that in the majority of countries, inflation continues to rise beyond expectations, inflation projections for the coming period are also being substantially revised up, and accordingly, central banks in these countries are carrying on with monetary policy tightening. Under the impact of international movements, inflation in Serbia also remained on the upward path and stood at 9.6% year-on-year in April. A fresh hike in the global prices of energy, food, and raw materials pushed up import prices and stepped up cost-push pressures on domestic producer prices. Against such backdrop, we also witnessed growth of core inflation, which is CPI excluding the prices of food, energy, alcohol, and cigarettes, which is the most affected by monetary policy measures. Nonetheless, we maintained the relative stability of the exchange rate, which, together with medium-term inflation expectations of the financial and corporate sectors that have been anchored within the target tolerance band, acted as a strong brake that kept core inflation lower than headline inflation. In addition, according to our estimates, domestic demand and labor market conditions still do not generate stronger inflationary pressures. Core inflation in Serbia is lower than in the majority of countries in the region pursuing the same monetary policy regime, which is the reason why our tightening of monetary conditions in the prior period was more moderate than theirs. According to our new central projection, we expect year-on-year inflation to strike a downward trajectory in the second half of the year, though from a higher level than anticipated in February. It will most likely return within the target tolerance band in the second half of 2023 and then continue to slow down until the end of the projection horizon. Rising global prices of primary commodities, energy, as well as higher imported inflation will continue to exert inflationary pressures for several more months. However, these pressures are expected to subside over the projection horizon, as indicated by projections of relevant international institutions, as well as market expectations. Also, the arrival of the new agricultural season should topple fruit and vegetable prices from their currently high levels and, through lower costs, result in slower processed food price growth. The effects of past tightening of monetary conditions will also work towards mitigating inflationary pressures, as will the effects of the government's economic measures on food and energy prices in the domestic market in the short run. Our decision on further tightening of monetary conditions was based on stepped-up cost-push pressures in the international and domestic environment, which intensified additionally with the outbreak of the conflict in Ukraine, as well as the need to influence inflation expectations of market players and limit the second-round effects on the prices of other products and services. Before the April meeting of the Executive Board, we responded by raising the weighted average interest rate in repo auctions, where we engage in weekly withdrawal of excess dinar liquidity from the banking system. When this rate became almost equal to the key policy rate, we raised the key policy rate by 50 basis points in April for the first time in 9 years. In May, we raised the rate again by another 50 basis points to its present level of 2%. When making these decisions, we made sure that our monetary policy is consistent with delivering price stability in the medium term, as well as that financing conditions remain relatively favorable from the point of view of ensuring continued stable growth in lending and overall economic activity. Lending accelerated relative to end 2021 and was 12.1% higher in March than a year ago. While its composition by sector and purpose confirms that it remains an important source of production, investment, and consumption financing. We will explain this later on, but I would like to add immediately that we have a much higher increase in housing loans than in cash loans intended for personal consumption, and this is a good ratio, 12.3%, and for cash loans, growth is 9.9%. Lending growth is also propped by the preserved financial soundness of banks, as well as the quality of their assets. This is attested by the share of NPLs in total loans, which contracted further to 3.4% in March, this being almost its lowest level on record, as well as the capital adequacy ratio of around 20%, which is significantly beyond the regulatory minimum. The effects of the Ukraine conflict, which have slowly begun to spill over to economic activity in the euro area, have so far not produced any major effects on economic activity in Serbia. According to the preliminary estimate of the Statistical Office, year-on-year GDP growth remained relatively dynamic in the first quarter of this year, measuring 4.3%. Growth was led primarily by increased activity in the service sectors and industry on the production side, and by consumption and investment, including inventories, on the expenditure side. Conversely, net exports provided a higher than anticipated negative contribution amid elevated import of energy, but also of equipment and intermediate goods for investment project implementation, though manufacturing and mining output, and by extension export, continue to record high growth rates. In view of the negative effects produced so far by the Ukraine conflict, primarily its impact on global prices of energy and other raw materials, and the resulting global outlook revisions by leading international institutions, the National Bank of Serbia has revised Serbia's GDP projection as well. Under our new projection, GDP growth this year will range from 3.5 to 4.5%, down by 0.5 percentage points from what we expected in February. This was done by other relevant international institutions as well, such as the International Monetary Fund, European Bank for Reconstruction and Development, and consensus forecasts, though it is important to note that Serbia's economic growth outlook was revised down almost the least among the countries of the region. The key factors behind the downward revision of real GDP growth include international developments, that is, the negative effects of the conflict, and estimates of lower economic growth in the euro area and countries of the region. Assuming that geopolitical tensions would not heighten further and that the global gas supply would not be discontinued, we have kept our medium-term GDP growth projection of 4 to 5% per year unchanged, with a further increase in employment. A favorable medium-term outlook is sustained by Serbia's preserved macroeconomic and financial stability, as well as investment and consumer confidence, but also by increased production capacities, primarily in the tradable sectors, and the anticipated implementation of planned strategic infrastructure projects. As a result, the share of fixed investment in GDP should exceed the desirable level of 25% next year and continue up. Elevated energy import, resulting mostly from higher import prices, led to a widening of the current account deficit and added to depreciation pressures in the domestic FX market since the start of the year. For this reason, we have also revised our current account deficit projection for this year from below 5%, which is what we expected in February, to 6.5% of GDP. It is, however, important to note that this continues to be a deficit which both in our and in the IMF's estimate ensures external sustainability. Over the coming years, the current account deficit is expected to contract gradually towards 5% of GDP, assuming a normalization of energy prices, and to be covered by net FDI inflows to a substantial degree. Depreciation pressures also stemmed from increased risk aversion amid uncertainty prevailing in the international financial market and households' elevated demand for cash in the initial weeks of the conflict. FDI inflow worked in the opposite direction, measuring 745 million euros in the 4 months of the year and remaining diversified by project and geographical region. The first 10 days of May are also favorable, and they give us hope that we will realize our projected figures of 2.10 billion for this year. The MBS alleviated depreciation pressures by intervening in the FX market, thereby providing additional FX liquidity to banks, and in April, also by raising the key policy rate. As a result, the dinar remained almost unchanged against the euro. By preserving exchange rate stability, we prevented the spillover of rising import prices of food and energy to other prices from being compounded by the effects of dinar depreciation, which was the case in previous episodes of robust growth in these prices. By doing so, we also prevented a fall in consumer and investment confidence. At the same time, I wish to reiterate that thanks to a responsible conduct of economic policy and the proactive measures taken over the past years, we increased our FX reserves in order to be able to use them for responding to crises such as these, which we have been facing in the past 2 years. Despite hefty interventions in March, Serbia's foreign exchange reserves remained adequate at 14.1 billion at end April, covering 5 months' worth of the import of goods and services, which is almost twice the level prescribed by the standard on the adequacy of foreign exchange reserves. Ladies and gentlemen, esteemed colleagues, until recently, hardly anyone could have imagined that the world would face the consequences of the coronavirus pandemic, the energy crisis, and such heightened geopolitical tensions at almost the same time. At present, there are many great unknowns: the duration of the Ukraine conflict and its possible long-term consequences for global trade, as well as the prices and availability of energy, industrial raw materials, and food. Uncertainty also refers to the complexity of the functioning of global markets in the conditions of geopolitical tensions and global value chain disruptions, speed of normalization of monetary policies of leading central banks, and the effects on global financial conditions, etc. For the time being, we judge that the risks to the projection of global and domestic growth are tilted to the downside and those to inflation to the upside. As economic policy makers, we are faced with multiple challenges. You may, however, rest assured that the government and the MBS will pursue a consistent and responsible economic policy and do everything to make sure our economy is strengthened further, just as we did after the pandemic broke out. In this way, we will increase our economy's resilience further and stand ready to respond to all challenges coming from the international environment. Going forward, we will continue to carefully monitor and evaluate factors from the domestic and international environment, which will determine our future decisions and steps. Depending on geopolitical developments and the movement in key inflation factors from the domestic and international environment, the MBS will estimate whether there is a need to tighten monetary conditions further or whether the effects of past tightening ensure a sustainable return of inflation within the target tolerance band over the projection horizon. Delivering price and financial stability in the medium term remains the National Bank of Serbia's monetary policy priority, while supporting further economic growth and development, a further rise in employment, and a favorable investment environment. Before I give the floor to my colleagues from the Economic Research and Statistics Department, that is to its General Manager, Mr. Savo Jakovljević, who will present our latest projections in more details, I would like to draw your attention to something very interesting, to a very interesting explanation of the concept of imported inflation, because we are faced now with a situation where we use some terms confident that people know what they mean. Though many people tend to use imported inflation as an excuse for high inflation, my colleagues presented a very interesting and illustrative overview that will be presented later on by our Milan Trajković, the Deputy General Manager of the Economic Research and Statistics Department. I will only show you one photo from his presentation so you can see to what extent oil and energy prices impact the prices of all products that we buy. I want you to see how the domestic food we produce currently responds to the prices on Paris, Chicago, and Novi Sad commodity stock exchange. Of course, our presentation is also interesting, but I also want to announce the presentation of Mira Miletic, who will present one of the 4 text boxes in the inflation report. I hope you will find them rather interesting. One of them is a comparative overview of the measures which countries in the region took to ensure the poorest strata of the population do not feel the consequences of the crisis that much, as well as the measures taken to help the National Bank of Serbia curb inflation. There is also an interesting text box describing how the policies of leading central banks, the ECB and the Fed, impact the decisions we take, primarily taking into account portfolio investors, but also the fact that the EU and its euro area and its ECB is our key foreign trade partner. Mira will explain this in detail later on, and now I give the floor to Savo Jakovljević. I also thank you for your attention.
As the governor has said in her speech, we shall now elaborate on the projections that the governor emphasized in her speech, and in general, the largest change concerns inflation compared to our February inflation report, which is logical given the overall developments in the international developments and the factors impacting inflation, not only here, but abroad as well. So I will give you a few figures, and then we will discuss the factors behind the increase. Average inflation, which we expect this year, in February inflation report, we estimated average inflation at 6.4%. In the current projection, average inflation for this year is expected at 9.2%. The difference is 2.8 percentage points, and it can be fully explained by 4 factors that are largely associated with developments in the international environment. And all these 4 factors contribute equally by 1/4 to the increase in inflation if we compare the February and May projections. So these are the rising global oil prices, higher inflation in the countries that are our key foreign trade partners, the euro area primarily, a further increase in fruit and vegetable prices, and an increase in the prices of primary agricultural commodities. So I will try to give you a brief overview of the contribution of each of these components. Global oil price skyrocketed before the Ukraine crisis. It was around $90 US per barrel in February, only to shoot past $130 per barrel. The volatility was extremely high. Now this volatility is between $100 and $115 per barrel. We also take into account, when we make our projections, the values of futures. So what do the markets expect in terms of the oil price at the end of the year? In February, the futures value was $81 per barrel, and now it is 98% per barrel. So we can see here an increase in this value by somewhat over 20%. So the oil prices spilled over to our market through rising prices of petroleum products at petrol stations. When we talk about diesel and gas in general, but it also spilled over to the prices of many other products, which will Milan elaborate in more detail later on. And when we take into account this effect, I mentioned 2.8, 0.7% of the increase is attributable to the increase in oil prices. The government gave up on a portion of the excise tax on the prices of petroleum product prices. This is an important reason why inflation here is still lower compared to the countries in our region, which have a higher inflation. Now we have another factor is high inflation in our key trade partners, primarily the euro area. So the last, in April, inflation in the euro area was 7.5%. In February, we had the average inflation for the euro area of 3.1%, and now international institutions estimate that average inflation in the euro area will be 6.5% this year. So based on these grounds, so the projection almost doubled. And as we do export and we also import some products from the euro area. So this is the increase of 2.8%, and here we have 0.8 percentage points. As for the prices of fruit and vegetables, in February they were already rather high, and we expected that in the months that followed they should gradually go down. However, again, we had some factors from the international market. We had high prices of fertilizers, high prices of oil and petroleum products, which are important for agricultural production. And due to this, the prices of fruit and vegetables, I emphasize vegetables because they make a significant contribution to inflation. They have still not started falling, but perhaps we are seeing the start of the fall. We believe that with the start of a good season, these prices may go down, but compared to what we expected in February, this decline starts later and from a higher level than we expected in February, and this contribution is 0.7 percentage points. The fourth factor are the global prices of primary agricultural commodities. There are so many products here when we take a look at prices on stock exchanges by the end of the year. Now, actually, we expect that these prices will be by 20% higher than a few months ago. That is before the escalation of the conflict in Ukraine. And here we have 0.4 percentage points. Overall, the overall increase in inflation is attributable I'm referring to the average expected inflation. So this inflation relies on these 4 factors. So imported inflation, as I said, which we cannot impact, and we do try to rein such inflation. My colleague Milan will explain imported inflation in more detail. As for our 2 other projections of GDP and the current account deficit, so again, GDP was revised down due to external factors, because the first quarter was good, and we had to take into account the negative effects of the conflict in Ukraine on the rise in prices of energy and other raw materials, which push up production costs. And on the other hand, we also see problems in the euro area. They may dent external demand, which may impact our exports to the euro area. So these factors are very important. They are actually the key factors behind the revision of our projection. In general, the revisions within the projection itself were not so major in terms of individual items. Some items even went up, such as mining, for instance, because we saw expanded activity due to higher exploitation of copper ore. As for the current account deficit, we took into account the developments that are unfolding right now. And as for the first quarter, we've seen some repercussions in the energy sector and imported prices of energy product. We have this energy balance for the first quarter. The trade in energy, this deficit has increased by 1.2 billion euros. And the quantities which we import have gone up as well, but the increase is attributable to imported prices of energy. And when we took into account these movements in the first quarter, by the end of the year, that is for the overall year, the deficit will equal 6.5%. And with the normalization, we do hope, of the prices of energy, this deficit will most likely to go down to 5%. And I didn't mention GDP. We haven't revised the medium-term GDP growth projection. Next year and this year, we expect it to range between 4% and 5%. So that's all what I wanted to say. Now, Milan? Nicola, I didn't forget you. Perhaps you could elaborate on the way we make decisions. People do not know much about it. Milan, please, the floor is yours.
In recent months, we have often mentioned the term imported inflation, and we have also mentioned it several times during today's presentation. That inflation that we face in Serbia is largely attributable to imported inflation. What first comes to mind when we mention imported inflation are probably oil and gas prices, but we're talking about a significantly higher number of products and raw materials that in different ways affect inflation. The major portion of inflation we face, and that we are about to face for quite some time yet, is attributable to what we call imported inflation. Imported inflation is the most important reason why we revised our GDP growth projection downwards and the current account deficit projection. Though export growth remains double-digit, due to higher import prices, we will have a higher foreign trade deficit, and this problem reflects on a somewhat lower available income for consumption and lower disposable income for investment of the corporate sector. Of the 9.6% year-on-year inflation in April, when you divide consumer basket into those products that are tradable and those that are non-tradable, we can see that the growth in prices of tradable products amounted to around 12%, while the prices of non-tradable products averaged their growth averaged around 4%. Imported inflation can be divided into 3 parts. The first part relates to the rise in products that we all consume and which we directly import. The second part relates to stock exchange goods and the fact that Serbia is a small economy, a part of the free market, and an economy with a small trade barrier barriers with abroad, which is why prices from regional and global markets quickly spill over to domestic prices. And finally, the third and probably the major and the largest portion of inflation is the incorporation of the rise in energy prices and other raw materials into several hundreds of different products through the cost price of their production. When talking about the products that we use and which are directly imported, their prices increased on average between 5 to 25%. For instance, to illustrate this, we will use citrus fruits, coffee, a part of clothes and footwear, a part of furniture, as well as the major portion of products classified as electronics and household appliances. When talking about energy prices that we import, for instance, average global oil price in March and April last year equaled on average around $65 per barrel, whereas in March and April this year it averaged on average around $111, which is an increase of around 70% in a year. The price of natural gas in March and April last year ranged from $200 to $300 per 1,000 cubic meters, whereas in March and April this year it ranged from $700 to $1,800 for 1,000 cubic meters, which is on average a price increase of around 3 to 5 times. When talking about the second component of imported inflation, that is the rise in the prices of wheat, corn, soybean, sunflower, and other agricultural products in the global market. At first sight, you may be tempted to think that this should not have anything to do with Serbia, given that Serbia produces almost twice more of these products than we need. But we're talking about the fact that corn and wheat and other agricultural products are commodity exchange goods whose price is formed in the free market. Due to the fact that Serbia is a small and open economy, any rise in the prices of stock exchange commodities leads to a rise in those products in Serbia as well. If the price of these goods abroad is higher, then producers or merchants will not sell their goods in Serbia but abroad. This, inter alia, is one of the reasons why there are currently some restrictions on the export of agricultural commodities in Serbia. On this slide, you can see that the degree of correlation between domestic and international price of wheat is 90%, and that a price change happens almost simultaneously. A major difference happened only in the past several months since restrictions on the exports of agricultural products from Serbia apply. On the next slide, you can see that with corn prices, the degree of correlation between domestic and international prices is even higher. It is around 93%. The impact of the rise in corn prices on imported inflation is higher because corn and products derived by corn processing, such as ethanol and ethylene, are used in numerous other industries, such as the production of plastic packaging, production of cosmetics, as well as textile and pharmaceutical industry. And now we arrive at the third part of imported inflation, which is probably the most important of all, and this is the indirect effect of the rise in global energy prices and raw materials to almost all products we used. We will use, as an example, bottled water. Packaging accounts for the major portion of the cost price in production and in the retail price of bottled water. The bottle of water costs 50 dinars in a retail store. Within that, the cost of water is almost negligible, and several dinars relates to taxes and fees paid by the producer to the government. Everything else refers to oil. Bottle is made of oil, bottle cap is also made of oil, and the label is made of oil. Ultimately, the product needs to be transported, and here we again come to oil. In order to produce 4 plastic bottles, 1 liter bottles, we need 1 liter of crude oil. A similar situation we have a similar situation with other products which are classified as food and which come in kind of packaging. We have a similar thing with the production of tires. The production of 1 standard automobile tire requires 25 to 30 liters of crude oil, while the production of a tire for vehicles used in industry or in transport of a larger number of passengers requires around 100 liters of crude oil. Then 2/3 of materials in the production of clothes are associated with oil processing. Around 1.5% of global oil is used for the production of synthetic materials used in the production of clothes, polyester, nylon, acrylic, elastine, and other synthetic materials. Also, parts of footwear are produced from oil, and finally around 95% of all compounds used in the production of cosmetics are produced in some kind of way from crude oil. Overall, the production of several thousands of products that we use for personal consumption and business activities start with the processing of crude oil. That is why it accounts for the major portion of imported inflation. It was important for us to explain that we are not talking only about the direct effect of the rise in energy prices on fuel and gas prices in Serbia, but that we are talking about the indirect effect which energy price growth has on all other products. Thank you, Milan. This will probably not make it easier for anybody to make purchases when they go to retail stores, but it will help people understand the effects of the rise in energy prices. Because, you know, when people understand the reasons for some phenomena, they find it more easier to deal with the problems these phenomena cause. I have to say that the President's statement is quite correct. Maybe he regrets that they reduced excise tax on fuel, because once you introduce a paradigm, it is difficult to go back to what preceded it. Like they used to say in Rome, damn the day when they introduced free bread. I'm quoting now from Cicero's trilogy, because what starts as a gift turns out to be a gratitude and ends up as a natural need. So the citizens have to know that the state is not something that makes money. Rather, it is an institution that collects taxes, and through other fees and income, it performs reallocation of what it receives in order to make investments, in order to ensure security of borders, proper health care to citizens, and everything else. And when someone tells me these are taxpayers' money, this is taxpayers' money, yes, it's true, but it matters who collects them and how they invest the money. It does matter who represents the state, because those who represent the state differently and who spend money differently, they have to make the lives of citizens easier in circumstances which are beyond our effect, but we have to deal with their consequences. Because how do we do this?
As for the decisions we make, they will be explained by Nicola. Through a third of daily reports which we follow in order to make a single decision. For instance, on a one-week withdrawal, that is on rep operations which we undertake on Wednesdays. This is a fine-tuning instrument of monetary policy, and I would like to ask Mira to make a short comparative overview before Nicola about the countries that showed responsibility towards their citizens. I rarely wish to say how other people do that or this, because we are a specific economy and we have to make decisions on our own. But I hope that Polish people would not take it amiss, but I have to mention the Polish almost panic response when it came to raising the key policy rate, which went up by over 500 basis points. And this actually impacted on lending rates that the citizens have to pay, because these hikes have a direct influence on the installments that the citizens have to repay. And this is a vicious circle, because it goes to the choice whether to pay a loan or buy food. Of course, you have to buy food. You will not pay a loan installment and so on. And then this results in an increase in NPLs and the refrainment of banks from extending loans and so on. So here it is very important to understand the decisions being made, to understand the responsibility with which we make these decisions, as well as to understand all the conditions based on which we measure everything being done and said by more serious and larger economies than our. But for us, when it comes to us, we are the most responsible towards our citizens, because we have to make decisions that are in the long-term interest of our population. So please, Mira, would you like to say a few words? Until recently, we had a subsection on our website, the right of the public to know, and sometimes we were just prompted to make this subdomain because journalists used to ask some questions, and sometimes our answers would not be published at all because they perhaps expected a different answer, or they distorted our answers. And this is why a few years ago, I will not be modest, on my initiative, we introduced this, the right of the public to know section, and we published the journalists' queries and our answers and so on. And believe me, this resulted in increased seriousness of journalists, and we, of course, continued to behave responsibly. In these circumstances, we understood that there are some topics which we believed that people would know what they mean, and we actually understood in terms of the questions and emails that we receive that the public are not familiar enough with some issues, and we introduced this section, useful to know. And our Mira recorded on our initiative again a short video message about the key policy rate, and some media reported her message. I will not advertise them, but I'm really grateful because some people do visit our website, some others do not, but the media, the portals are being read, and everybody can contribute today with complete information, so that we weather these troublesome times in a better way. Thank you, Madam Governor. So I will be brief. The Governor mentioned the text boxes in the current issue of the inflation report. So we elaborated on current issues that marked the period from the previous inflation report. This is a text box mentioned by the Governor, the response of the economic policy in Serbia to rising global prices of food and energy. And we gave a comparative overview of Serbia with other countries in the region. And it is possible to see here that Serbia did not lag in terms of the measures adopted. The aim was to protect the living standard of citizens, to ensure the smooth functioning of commodity and money flows, and sufficient supply of the market with food and energy. Those were a great number of measures, such as limiting the prices of basic foodstuffs, bread, vegetable oil, flour. Then we intervened from our commodity reserves in order to ensure market supply and its smooth functioning. Then we lowered the excises on petroleum products. We limited retail prices, and to ensure agricultural output, we limited the prices to 179 per litre. Within this text box, you can see that other countries in the region, the Governor mentioned Poland, other countries such as Hungary, the Czech Republic, and so on, undertook similar measures by reducing excises or by abandoning the collection of VAT, or by limiting the prices of basic foodstuffs. So those were the most important measures introduced. So Serbia did not lag behind. The second text box is about the macroeconomic effects of the conflict in Ukraine on Serbia. We have already discussed this here. The governor and my colleagues touched upon this because the conflict in Ukraine contributed most to the change in our projections of inflation to the upside and of the current account deficit to the upside as well, and of GDP to the downside. The third text box deals with the expected effects of the normalization of monetary policies of leading central banks, the Fed and the ECB. For the sake of reminder, the Fed has already started to tighten its monetary policy by hiking its Fed funds rates in March and May, and these effects have not been there have not been direct effects on Serbia because there are no significant trade links. Around 40% of exports of Serbia goes to the euro area and around 2% to the USA, which is why we are impacted more by the decisions of the ECB. But nonetheless, these two central banks do affect overall liquidity in the global financial market. And the decisions of the Fed do have such impact, of course. They have a greater impact if tightening is not expected, if it is higher as well, and more aggressive than expected by markets. For the time being, both the March and May hikes in the Fed funds rate were expected, and markets already calculated this in their portfolios, and this did not have any major negative effects when it comes to capital flows to emerging economies, including Serbia. The ECB, for the time being, has still not made a decision on hiking its policy rate. It has not announced it either, although it is expected to do so in the second half of the year, but certainly until the end of the year. We should bear in mind the fact that the ECB will certainly be cautious. Inflationary pressures have gone up, of course, so there is a need to respond by raising the policy rate, but the conflict in Ukraine has also impacted the global growth outlook in the euro area, which was revised down according to the estimates of all relevant international institutions. And in this regard, the ECB will be cautious when making its policy rate decisions. It is important to emphasize that the increase in the key policy rate may affect the interest rates on loans in the domestic market, which are linked to the foreign currency, that is the euro. But as the interest rates in case of loans to corporates and households move close to their lowest levels, according to the March data, the interest rate on euro-indexed loans to the corporate sector equals 2.3% and to the households 3.5%. And these are almost the lowest values ever recorded. So the increase itself in the key policy rate by the ECB should not more significantly negatively affect these rates. Moreover, in the past period, when it comes to dinar and euro-indexed loans, both the corporate and household sectors use the opportunity to refinance their loans at much more favorable conditions in the past period, owing to the effects of past monetary policy easing, which is why we do not expect any major negative effects. When it comes to portfolio investment, for the time being, our investor base has expanded a lot, both in terms of geography and destination. So they do invest here, and we should not expect any major negative effects. And when it comes to the expected strengthening of the dollar, we should emphasize that the share of the dollar in our public debt has gone down. It is currently around 11%, meaning that we do not expect. So the currency risk has gone down, the diversification has gone up, and we are less vulnerable to the effects. And it is very important that owing to macroeconomic stability, we have reduced reliance on external sources of funding. And let me just mention the fourth text box as well. We dealt here with the revision of our macroeconomic projections, which Sabo has already touched upon. I have to correct Mira. She said that Serbia did not lag behind. Actually, Serbia was a forerunner when it came to the adoption of these measures, and we were also a forerunner when it came to the measures which we adopted to tackle the COVID-19 pandemic. We did not look up to anyone. Of course, we are being modest in general, and Mira reflected our modesty, but I do have to correct her. We did not lag behind, but we were at the forefront of everyone else. Now we could say something about the loans.
Thank you, Governor. I would just like to present several data on topical issues, because we see that the media are interested in this topic. When it comes to data for 2021 and several months of 2022, as opposed to some doubts circulated in the media, when it comes to 2021, housing loans grew more than cash loans at the rate of 17.3%, whereas cash loans were rising at 9.9% in absolute amounts. So housing loans increased by 79 billion dinars, while cash loans increased by 54 billion dinars. The increase in cash loans was lower in 2021 than in previous years. Also, this year, housing loans increased by 14.1 billion dinars and cash loans increased by 8.8 billion dinars. Thank you, Željko. Nicola, will you please explain our decisions? Thank you, Governor. The National Bank of Serbia never makes a decision at a single meeting. Everybody knows that the Executive Board makes a decision on the key policy rate, but the Executive Board of the National Bank of Serbia, headed by the Governor, discusses and considers many issues, not only the key policy rate and how the key policy rate will affect the entire macroeconomic landscape. And when we are making a decision on the rate, the overall picture of macroeconomy on the international plane and domestic plane, we also make decisions on banking supervision, on payment systems, and these decisions affect the overall flows in the country. Serbia is a front runner when it comes to decision making. We work proactively. We do not respond. We do not wait for particular negative effects to hit us. We work in advance. Since October last year, we started tightening our monetary conditions, that is the restrictiveness of our monetary policy. The Governor highlighted this in her address. So we raised it until the level of the key policy rate, which until April equaled 1%, and after the increases it equals 2%. But one of the instruments which also had a strong effect on the monetary policy tightening are Mbs interventions. When you say interventions, you most often refer to the exchange rate. And of course, these interventions are a pillar of stability and something that helped us achieve exchange rate stability. But these interventions also serve to ensure liquidity. But in order not to have any negative effects on a sudden rise in interest rates on loans, or on economic growth, the National Bank of Serbia, in between meetings of the Executive Board, acted with a number of other instruments, and these are direct repo operations, swap transactions in which we engage with banks in order to perform fine-tuning of liquidity conditions. So monetary conditions are tightened, but we are taking care that this is gradual, consistent with the character, that is with the nature of inflationary pressures. So we're not taking care only about the domestic environment, but also about the international environment. And this is best illustrated by a number of reports that are submitted to the Executive Board and to the Governor in order to be able to make informed decisions. One of these reports has 6 to 7 pages, and it is about stock exchange indices and yields on bonds of different countries. These reports cover movements in money markets, exchange rate trends. For instance, we can say that we have a report on the movements of exchange rates of different countries. We can say that the forint lost 4.4%, the Polish zloty 1.4%, while the dinar has remained stable since the beginning of the year. What we also take into account is the risk premium, stock exchange commodity prices, and maybe an interesting indicator of our attention to international environment is what Mira mentioned, the impact of Fed's decisions. And we pay special attention to how each member of the European Central Bank makes a decision and how they vote, because any of their decisions has an impact on the economy. Any lack of consensus in the voting of the Executive Board, of the ECB's Executive Board, has a significant impact. So we follow the doves and hawks. We monitor how they voted, and we have, you can see the overview we have, the distribution of votes and how different members voted, because the statements of each member is an indication of how the ECB might respond in the coming period. So we are following closely statements of each and every member of the ECB's Governing Council. When it comes to current developments in the FX market, we can say that owing to the stability enabled by the National Bank of Serbia during February, March, and the first half of April, there has been a complete turnaround in the factors and their impact in the foreign exchange market. In recent days, we are facing appreciation pressures again, and again, thanks to this, we are now acting as the net buyers of foreign exchange, which hardly anyone could expect until a few days ago, because the National Bank of Serbia worked hard on maintaining stability, and two factors have completely turned around. First, the citizens who bought more than 600 million euros of foreign cash in March are now again selling foreign cash, and this has a positive impact on the exchange. And second, portfolio investors, or as we like to say, foreigners, are no longer showing great demand for foreign currency, but they're selling them because they're investing more in dinar securities. We had several meetings where foreign investors expressed immense gratitude for our actions during the crisis, and now they're again making investments, and this speaks volumes about the importance of keeping stability. The governor communicated regularly with the public, with the press, in times of increased uncertainty, and it insisted on maintaining stability in such conditions, and now this has translated into figures, and the figures show that this was the right approach.
The credibility of monetary authorities is highly important, and whether somebody wishes to admit this or not. So the country is no longer the same country in the 10th year of our government, and people believe the government's deeds and words, and this reversed trend that portfolio investors do not exit anymore, and they were not prevented from exiting at the moments when uncertainty was at its highest. We know that the market, that is the exchange rate, has remained stable. The market has functioned smoothly, and portfolio investors were able to go out from this market freely, but they understood that our words about stability that is without an alternative are not hollow words, but we do prove our words with our everyday deeds. And I'm the happiest person actually here, because for the second day in a row we have started buying foreign currency. We do not want the dinar to appreciate too much. Our interventions meant the tightening of monetary policy. How? Well, in fact, by selling foreign currency in order to prevent the weakening of the dinar in those episodes of depreciation. We were withdrawing dinars from the market. So this is the type of tightening which is not a collateral effect, but it was a well thought out strategy which we aimed to maintain the stability of the exchange rate and to tighten our monetary conditions at the same time. The representatives of the Serbian Association of Banks are here today with us, and they can testify to the creativity of the National Bank of Serbia, particularly the Department for FX and Monetary Operations. They found different types of auctions, both dinar and FX, and they provided banks with sufficient liquidity. They just prevented the absence of the dinar. They increased rates on newly approved loans because the National Bank of Serbia appeared both as the last resort, but also as the first resort for liquidity. And we, at the same time, took into account, we actually strove to keep under control all inflationary pressures. I know that some of you will ask about the closing of exchange dealers. I'm really surprised with yesterday's news that somebody, is that true, Stefan, represented himself as a false inspector, whereas we have our regular communication channel with all exchange dealers, and we inform them through this channel that they have 5 numbers functioning 24/7. These are mobile phone numbers, and it is possible to report about a person entering the exchange offices, presenting himself as an inspector, but without a valid license. And we explained how this person should look like, but so the exchange dealers were informed about it. They were informed in detail, but still it happened that there were 2 cases of false inspectors, and they but fortunately the police responded and they were arrested. When it comes to irregularities, many of these irregularities were rectified, and we also allowed some exchange dealers to reopen their offices, but we do continue to supervise the exchange dealers, and our inspection stepped up at the time when there was false news that there were lines in front of the exchange offices. But of course we will continue doing this activity, and we do not want anyone to take avail of these troublesome times. And I like to cite Voltaire, who said that history is not repeated, but human actions are being repeated, because history does not happen on its own. It is created by people. In these troublesome times, many people spread false news, and they use media in a distorted way, in a wrong way. But we will not allow anyone to undermine what we have been creating since August 2012. And this is stability without an alternative. So the floor is yours. If you have any questions, be free to ask. Savic from Bloomberg Agency. So you revised your inflation projection, and as you said, by mid-year you expect a peak. So there is a fan chart here. Can you specify the month? Is that June, July, and what are the annual rates in percentage? We expect the peak to be reached in summer months, in June or July, and then the downward trend should continue. Inflation should lower by the end of the year, when it should be around 8%. It should continue going down in the first half of next year. And in the second half, it should enter, or the third quarter, it should enter the target tolerance band, meaning it should equal between 1.5 and 4.5%. But what is the level that you envisage? You are asking me whether inflation will be two-digit or not. Oh, I will tell you. In 2012, in August, when I became the governor, on the proposal of Alexander Vučić, and this proposal was signed by the president, Tomislav Nikolić, and the inflation at the time was two-digit. I think it was 12.9%. We do not fear two-digit inflation, so we inherited this two-digit inflation. Two-thirds of this inflation was a result of the volatility of the exchange rate, and the government and the National Bank were like two opposing parties, and each of these parties was pulling things on its own side. Željko helped me a lot, and we somehow managed to determine the owners of custody accounts of banks who dealt more with the exchange rate than with their lending activity. But we ensured the stability of the exchange rate through our interventions and by analyzing the causes behind such volatility. So already in 2013, I believe it was October or November, we reduced inflation to 2%, and we maintained inflation at 2% until last year. So right now we have two-thirds of imported inflation that Milan explained to you in terms of energy products. That is, there are direct and indirect effects. So we have this inflation calculated in the packaging of some food. So we also have transport, aluminium, but also packaging and plastic and so on. We do not expect this to go beyond 10.5% when it comes to two-digit inflation. But it would not be serious. So Mervyn King, I really like him. He was a former governor of the Bank of England, and they are again inviting him to explain the lags in responses of the Bank of England. And he said, I don't have a crystal ball to tell you this, because there are so many uncertainties in this equation behind this figure, and it would not be really serious to claim that this figure will be achieved. This is why we talk about our projections, our forecasts, based on the known input elements, because this equation has so many unknown elements. But we do not expect inflation to go above 10.5%, and we do not expect this trend to continue.
My question would be whether we should save money or spend money. If we have cost push inflation, we also have a demand push inflation of 10%. Last year, we have a great discrepancy between lending and deposit rates. Then the rates on savings and loans between 2 to 3%. 10% interest rates on cash loans. Or what should we do now? If we don't buy something now, maybe we will never be able to do so. This is a very inspiring question. I will first talk about the profitability of dinar and FX savings. We have a regular report on the profitability of FX and dinar savings. So you should not ask this question. If you have any excess money, you should save in dinars, because all the calculations published publicly speak in favor of greater profitability of dinar savings. However, I have always repeated, and I will do it again today, I will repeat Seneca's saying. I will repeat Seneca's saying that we should not make savings when we are nearing the bottom, because at the bottom we will have some unpleasant things. But you should make savings while the things are going well, because more than 5 billion euros were bought in the past year in order to prevent excessive strengthening of the dinar, while at the same time making buffers for the bad times. Even though 2 billion euros and 270 million were used for the purchase of energy, and we also spent some money on interventions in the FX market, we again have over 2 billion euros for in case the crisis lasts longer. I hope we will manage to compensate for what we spent, but we should definitely make savings when the times are good. So maybe I will not repeat the answer about coffee in the previous press conference, but many products are seeing a rise in prices. Wages do not rise to the same extent, and they could not cover long-lasting inflation at these levels. We cannot apply the elementary principle that has been enforced since forever, which means whether at personal level or at the level of investors, you have to have, and the Americans say so, and this applies to all of us, you have to have at least 6 months of reserves for to cover your regular needs. This is called saving for the rainy days, and you have to save at least 10% from your earnings, monthly earnings. And this used to apply before, but since the 50s, we have seen the creation of a profile of consumer and not of a saver. When the first credit card was introduced some 30 years ago, and I'm mentioning payment cards because I saw in the audience Vice Governor Dragana Stanic, who is in charge of the payment system and payment cards. During the 50s, credit cards were introduced, and after the war, when the military was returning from the war, they had to ensure housing. They had to, the government had to build a model of a consumer. So at a time, middle class, where there were no major differences between 99% of the population in the USA and 1%, which legitimately had much more money than the rest of the middle class. So they all drove cars, but one class was driving better cars. And for a time, a society was built where your neighbor, for a number of years, almost all the way until the 70s, had a similar standard of living as you. He he had similar vacations, they had similar furniture, and I'm talking about the American experience now, and I will tell you from which book I'm quoting this. You were able to watch 3 cable TVs, and there were no major differences, and and they didn't have inequalities that they do have nowadays. And this is why the United States are now rather concerned. And an average US citizen is much more pessimistic today because he's afraid that his children will find it more difficult to live and to earn a living than he did. So how did we arrive at such a situation? Over time, over years, through consumption that was easy to finance. But what did the people who couldn't finance consumption do? They were able to take loans, they were able to use a credit card and finance their standard of living, just as those who had real money. Ever since then, debt piled up, not only at personal but also at state level. And this type of consumption that was not considered bad found itself in, led us to a situation where we have huge inequality. And if you're reading Stiglitz's texts or of any other analyst, you will see that over a 10-year period, this 1% has been increasing their richness by 86%, whereas those 99% increased their richness by 18%. And this gap is widening further, creating dissatisfaction, which, together with internet and all the technology, has led to what we have today. Dissatisfaction on social media, where nobody can stand anybody else's opinion. You don't know how to articulate. Your solutions. The standards of baby boomers, which grew adult, they started to wonder, why am I not among the rich elite if I did everything right, if my parents took a loan for my education, if they took a loan for to buy a house, to buy a car, and then you arrive at a definition. A Turkish author, this is something that a Turkish author said: we have a hyperproduction of elites because everybody wants to be the wolf from Wall Street. They want to be in the Congress, and the number of CEO positions is limited. The number of positions in the Congress is also limited. And then you have 2008, where the differences between socialism and capitalism are erased, and debts are annulled, bank debts are rehabilitated, and you arrive at a key problem that Nicola and I discussed yesterday, while making some decisions, where after 2008, it was enabled to buy own shares through monetary easing, through quantitative easing. This money that has been pumped into systems was not used to enable competition, but it was used to destroy competition and to buy own shares, which is why today we are living in a monopoly and cartel world where we have only talk about equal opportunities rather than about real opportunities. Banks collude, companies collude. I'm not talking about Serbia now, but about something that happens worldwide. So my answer to your question is simple, but the genesis of how we came to this situation is quite clear to those who are dealing with this. But unfortunately, when Morgan Housel, whom I have been quoting often today, he has a lovely book, and I recommend it to anyone, The Psychology of Money. He says that the story about money is more of a story about psychology than about the laws of physics and mathematics. And it boils down to the story about greed and fear. It boils down to the story about who you receive information from and about who you trust when you save, when you invest, and when you buy. So greed, naivety, and fear. This is what it boils down to. I always say, trust yourselves, and the National Bank of Serbia is here to provide all the necessary information about what banks offer, what types of interest rates. And I'm proud of the fact that when negative interest rate policy was introduced, I said we will not allow it in Serbia because money is not a commodity that should spend, but rather that should earn. We did not allow it. Many people opposed this. We did not allow zero rate floor. We did not allow negative interest rates because destroying savings means to force people to be dependent on debt. Yes, banks are necessary, and I will defend them as institutions as long as they work as partners with their clients, aware that they depend on their clients. Banks cannot behave as someone who will bring their clients in debt slavery. Banks should be treated as our partners because society is an ecosystem. Only through cooperation can we leave this situation with as little scars as possible. And if you have money, as we did when we had excess money, we bought gold because gold does not require any special maintenance. We brought this gold to the bank. It does not require any special temperature, special conditions. And on the other hand, we have this security. Its price oscillates, but gold is gold. And it is in such a form that should we, God forbid, need it, we may market it quickly. When I mentioned the 50s, did you know that during the 50s, the FID gained its independence? Even though this was an association of private banks, it was in 1951 that it gained its independence, and ever since then it has coordinated with the president when agreeing on economic policy measures. I would like to use this opportunity to thank for the advice of the Serbian president. We listened to his advice. We analyzed the prices and price movements for 5 months and then bought gold. Of course, we are not, we are content because we have diversified FX reserves, but also the resources that are at our disposal. Only 50% of our debt is in US dollars. That is why we are not concerned about the strengthening of the dollar or about the movement of world currencies. I apologize for taking too long, but you have inspired me to share my thoughts. Thank you very much.
The Minister of Finance recently announced a scheme to support enterprises, I think for 1,400 dam. So are you familiar with this? Do you know anything about it? So nothing that we do is not done without an agreement with the Ministry of Finance and vice versa. So we do agree with each other. So this is the guarantee scheme number 2, and it is here in our building. We have to give our opinion on it. So we do work together on this type of support, just as we jointly talk to investors and we make numerous decisions together, which should contribute to the financing of the government or to the refinancing of existing debt. But fortunately, we created security in time, and we entered the market in time when conditions were more favorable than they are today. And this time of assistance that the Ministry of Finance proposed is right now being examined by Željko, and we are all involved in terms of giving suggestions to the new measures. If you don't have any further questions, thank you very much. Stoyan helped us technically and in writing some of the text box together with his colleagues. So thank you all, and most importantly, thank you to my associates.